Trade data released by the government on Monday revealed that merchandise trade deficit eased to $15.2 billion in April from $18.4 billion a year ago. This was contributed by a 12.7% drop in merchandise exports to $34.66 billion and a 14.1% merchandise import drop to $49.9 billion, both of which are on a year-on-year basis. Experts have observed that this year-on-year decline in merchandise trade deficit was primarily driven by non-oil items, with the fall in crude prices being partly absorbed by higher volumes. An import decline was observed for petroleum and crude products, with a decline and a difference in value of $2.46 billion, leaving petroleum imports at $15.17 billion. Subsequently, we see this reflected in April's export decline as well as far as petroleum products are concerned. A $1.38 billion difference in value was observed, leaving exports at $6.48 billion for April 2023. A reduction in export of gems and jewelry was also noticed. The ministry attributed this to a reduced demand in the US and in the Europe in line with recessionary trends. Gems and jewelry exports stood at $2.43 billion from $3.47 billion last year. Other decreases were observed in engineering goods along with ready-made garments. Engineering goods exports stood at $8.99 billion from its high of $9.68 billion last year, and ready-made goods exports fell to $1.21 billion from $1.57 billion last year. Going forward, a reduced demand in US and European markets are likely to impact India. The Commerce Ministry has cautioned that the demand scenario for the next 2 to 3 months are not optimistic, with things likely to change only from September perhaps. The impact is likely to be felt across export commodities like gems and jewelry, garments, petroleum, and perhaps even engineering goods. India is expected to look towards diversifying its products with higher export demand like electronic goods, oilseeds, agri products to compensate this. For more updates, stay tuned to BQ Prime.